Okay, I understand. Relax. Yes. Relax, relax, relax. It's gonna be okay. It's gonna be okay. Let's talk about it. What's going on, guys? This is Lando, Success, your favorite motivational teacher. Whenever you leave this channel, you're going to always learn something. And if you do, press that like button. And if you don't, make sure you press that subscribe button. See, I'm ready to talk about the market. I almost forgot the question of the video. The question for this video is, what do you consider a market crash? Oh my God, Lando, what should I do? Should I buy more shares? Should I sell my shares? What should I do? That's the questions I have been receiving in my inbox and the YouTube comments to text messages. So that's what we're going to talk about on this video. We're going to talk about what is going on. We're going to talk about the problem. Then we're going to talk about the solution. Since I'm more of a visual learner sometimes, I'm going to show you guys a visual of exactly what is going on. If any of you ever watched Fresh Prince of Bel-Air, do y'all remember when Carlton was on speed and he had to crash to calm down, had to go to the hospital?
Carlton, listen, something terrible has happened, man. Come on, I gotta get you to the hospital.
Why? This is the greatest night of mine.
Carlton. Yo, Carlton, man.
Y'all can't say that's not funny. So basically the market was performing a lot higher than expectations. So right now we kind of going through a correction, just calming everything down to get things in order. So we're going to look at some of the stocks and see how far some went down. Let's check it out. Most people don't even know what a stock market crash is on Investopedia. The key take notes say, a market crash is an abrupt drop in stock prices which may trigger a prolonged bear market or signal economic troubles ahead. A market crash can be made worse in fear of the market and herd behavior among panicked investors to sell. Then we're going to talk about the correction. What is a correction? How does it work? It's really the same thing, but not as bad as a crash. Correction is like a spider under your bed. You know it's there, it's lurking, but you don't know when it's going to make its next appearance. While you might lose sleep over the spider, you shouldn't lose sleep over a correction. To breeze through some of the takeaways, a correction is a decline of 10% or greater in the price of a security, asset, or financial market. Corrections can last from anywhere from days to months or even longer. Now let's look at the market. So first, this is the index. The index had its high. So you see it was this, I went back a year. So we look at it, you seen the high was right around right there, and this when coronavirus happened and everything went to hell, went down, down. People didn't think it was going to get no worse, and it got worse. But look at the market. It's almost back at its high, and it only went down right there. It didn't do too bad. If we go to the NASDAQ, this is all the tech stocks. Tech stocks, that's where the Amazons and all that type of stuff over here is at. And look at that. That's the same thing when the coronavirus happened. But look, it just reached a new high this week, recently. And look, it went down. If you look at things in hindsight, it don't look too bad, do it? Because you see it's going to keep on going up. So the market don't look that bad when you look at it like here. And since people love Tesla, let's go ahead and look at Tesla. Same thing. It went down a few times. Look how low it went. They got the price different since the stock split. But Tesla continued to go up. It goes down. And it just went down kind of big right there because it just hit its new high. Then it went back down. All right, so we just talked about what is going on. So now we need to talk about the problem. And unfortunately, you are the problem. Just kidding. But I'm kind of not. But Let me break it down. In 2020, we have so many new investors more than ever. You got to think how many people are starting to invest that never did, because back in the day, we had the Merrill Lynch's, we had the Vanguards, the old school brokers, but now we have the Stash Apps, we have the Robinhood. You can do it from Cash App. You can do a lot of Webull. It's a lot of easy ways to invest, and a lot of new people are doing it, which is dope. But since a lot of people really have no idea what is going on, they are hyping up the market. For example, if you got $10,000 in your bank account and somebody was like, man, I'm about to invest in this Tesla. I heard Tesla's going up, Tesla. They invest that 10 grand back some months ago, and that 10 grand went to 25,000. They're telling their other friends to do the same thing. And all of them is keep on taking their money and pumping up the market, even though that is a great thing. Instead of the company performing and doing that off its performance, is doing it off the emotion and the hypeness of it. So that's why I did the Carlton example, because everybody like, hey, go Tesla, go Tesla, go Tesla, and hyping it up. And when you do that, it is great, but it gotta crash. It gotta calm down. So that is one of the problems. We have so many new investors that's hyping it up. And the exact same thing, but on the opposite side, is once anything go bad, since they're not used to investing, once they see that $25,000 portfolio go all the way down to $19,000 in 2 days, they're going to panic. They're going to sell immediately. Yo, I'm up 9 grand. Let me sell right now. And when you do that, your friend's going to do that. Your cousin's going to do it. Your baby mama cousin's going to do it. Everybody going to do it. And that's going to make the price go down. And that's going to help the crash get even worse. So when I say you, yes, I am talking about the new investors. If you're an experienced investor, then I'm not talking about you. You shouldn't be offended. And the second problem is me. See how I did that? Y'all thought I just was only going to put the blame on you. Some go on me and other investors, because what happened is when we see the market go down, not always, but when you see the market go down and it's been going up this long, you've been making so much money, you want to take some of that profit out. You want to, hey man, let me sell some of this. Let me sit back, let me check my earnings, and let me go and strategize a little bit. But if you have a lot of people do that, that's also going to make the market get a little shaky. And I will talk about that another time. I didn't sell a lot, but I did sell some because I'm up a lot of money. But I teach new investors to just completely hold, wait till you get on advanced level of investing, then you do the crazy stuff. But right now, still hold. And the third problem is the media. The media make headlines, and they make headlines to induce panic, to make people go crazy. Oh my God, the stock market is crashing. Everything is terrible. Trump is about to get indicted and he about to blow up China and all this, blah, 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 blah. And people eat it up, and that also make the market goes up and down. All right, on this one, I'm just going to kick it with y'all for a second. Here are some solutions. Some of the solutions, well, it's going to mix in kind of with the problems. With a lot of new investors, this is what's going on. Since you are taking the money that you had in your bank account, putting it over to your Robinhood, and you seeing so much growth, so much more appealing and sexier watching that money grow versus that 0.002% in your bank account. And I understand it, but the problem is most people is putting all of their eggs in one basket. So if you have a bank account, make sure you still have money in there. Whether you want to have 3 months of bills stacked up in there, you want to have extra money. You don't want to put all of your money into the stock market, because this is what happens. When a crash or correction happen, like right now, somebody like me, I am still buying. I wanted Tesla under $400, and it was just about to hit 5, and it started going down. Boom, got Tesla for like $380. Wouldn't have been able to do that if I didn't have the money, because all my money is tied up into other stocks, and I'm scared to sell, scared to buy, don't want to do anything. So you gotta not tie up all of your money. Yes, the stock market is amazing. Yes, stock market is fun, but you gotta have some extra money laying around just in case this crazy stuff happen, because a lot of us is going to happen. You're going to buy on the high. When the stock gets at the highest price possible, that's when you're going to buy and it's going to go down. You're not going to make any money until it get back to the high. But when it's going down, you buy here, go down, you buy here, go down, you buy here. When it go up, you're making profit from this buy, you're making profit from this buy, and now you're back up to where you originally started. So you got to have a strategy whenever you're investing. And if you haven't watched it already, I will have the link up top. I did a webinar on investing strategies. And the things I talked about in there is 100% what you could be using right now. It's very amazing content. It's only $20. You get access to the video for a week. But if you don't want to watch it, you can just keep on watching these YouTube videos. Or you can join my Facebook investors group where I post daily about different investments that I'm thinking about, that I'm buying. It's Facebook community, so it's dope because you got a lot of people giving different content, feedback, talking about different stocks. So make sure you add yourself to it. I will have the link in the bio. Another thing you can do is do an audit on your portfolio. This is a perfect time. Look at your portfolio and look at the companies that you don't feel too confident about because your cousin or your friend or somebody told you about it and you invested into the company without doing your due diligence and your own research. What happened is when you're invested in powerful companies, let's say like Apple or Facebook, we know those companies are not going anywhere. So when the price drop down, it is okay. We know the company will be here 20 years from now. We know the price is going to go up. But when you're invested in companies that you're kind of iffy about, you've been waiting for 5 months for it to get back up to as high, probably need to let that go. And that's the last thing I will say, because even though I'm team hold, you need to be holding right now, not selling your stocks. We'll use Tesla, for example. Tesla, when it went down, y'all seen on the chart, when it went down to, I think it was 370 something. That's when people was like, man, hell with this, I'm selling. Soon as you sold, Tesla went back up. So you're gonna lose. It's damn if you do, damn if you don't. So it's better off to hold with these good companies and don't try to sell. Oh yeah, that's what I was gonna say. Some of you guys are gonna sell anyway. I already know. People don't enjoy losing money, but y'all are in the investing game and you're terrified and you're gonna sell. If you're gonna sell, which a lot of you are, my advice is sell the companies that you don't have that much faith in and buy into the companies that you have more faith in. Prime example, I had stocks in an airline company that wasn't performing well, wasn't really doing nothing, and I was losing money. I ended up selling all of those shares and buying Amazon shares some months ago, and Amazon went up. So it was a good move. So you kind of got to do it like that if you're going to do it. Well, this was a spare of the moment YouTube. I didn't want to make it too long today. So if you learned something new today, press the like button. And if you didn't, press the subscribe button. I will have all type of sweet stuff in the description. So if you want free stocks and all that type of stuff, it's like an infomercial. Every YouTube person got to do like a whole infomercial of all type of stuff and free stuff to get. Market will recover. You guys will be okay. It always goes up, and I will leave y'all with some good old Warren Buffett.
Stocks, as you know, trading once again near record highs. Does the market appear overvalued? Should investors worry about a correction?
Well, you shouldn't worry about, if you worry about corrections, you shouldn't own stocks. I mean, if you can't take your stock going down, it's going to go down sometime if you own a stock, so why worry about it? I mean, the point is to buy something that you like at a price you like, and then hold it for 20 years. And you should not look at it day to day. If you bought a farm or apartment house, you wouldn't get a quote on it every day or every week or every month. So it's a terrible mistake to think of stocks as something that bob up and down, and that you should pay attention to those bobs up and down.